Hey, everybody, and welcome back to the Teaching Tax Flow Podcast, episode 147. That's right, we're still creeping up on that 150, that episode 150 here. And today, we're going to get into that topic that everybody is bound to do at some point in their life. Hopefully, you make it to the last step of this. We are going to look at what to do as it relates to taxes when you're leaving an employer for multiple reasons. But without giving away too much, we are going to dive into it on today's episode. But before we do that, as always, let's take a moment and thank our episode sponsor.
Are you leaving money on the table? Are you an accredited investor seeking new and exciting investment opportunities? Look no further than Integrated Investment Group, your trusted partner in financial success. At IIG, the focus is on delivering exclusive investment options tailored to your unique needs and goals. Contact them today and let their expert team guide you toward your financial aspirations. Wondering if you qualify as an accredited investor? Visit teachingtaxflow.com/IIG to find out and take the first step towards a brighter financial future. Integrated Investment Group, your path to financial success begins here. Securities offered through Cabin Securities. Member FINRA SIPC.
All right, everybody, you heard in the intro, we are going to talk about some of those glorious, hopefully glorious, stages of life when you switch employers. So what does that mean exactly? You could leave for a million reasons, but hopefully some of you are listening to this, you're actually retiring. So congratulations, you made it to the other road. The light was there and it was not a train coming at you. So we're going to tie this into taxes for you, which some of the stuff you may not actually have known is even really a thing. So I don't know the answers to it. I'm not afraid to admit it. But this guy, if you're watching on the other side of the screen from me, Chris Picciurro, welcome back, sir. Your own show. Here you are again. You have the answers, which is why we let you back.
It's great to be back. John, we talk about it all the time that these topics come to us through the Teaching Tax Flow community. This is a true story. My family and I were back in Michigan for the 4th of July holiday and went to an outdoor mall that you and I have gone to before in the Detroit area. Randomly ran into some friends of ours that used to live in our neighborhood a decade ago that we're still friends with. And they're part of the Teaching Tax Flow community also, defeating taxes. But it was random that I ran into them. And the friend, she was telling my wife and I that her husband was changing jobs. And it was like, I didn't realize he was with the same company for probably 20 years. I didn't realize all of the considerations when you change jobs. And I'm like, that is a podcast episode.
Yeah. It's great when we come up with them that way.
And we said, all right, this is great. And answered her questions. And I thought, you know what? Let's talk through some of the tax and financial considerations when you are changing jobs and or leaving a job. And because I guess it's not really changing a job if you don't get another job, right? So what should you be considering when you leave one W-2 position for another W-2 position? What should you be considering when you leave a W-2 position and go into self-employment or start a business, or when you retire? So we're going to talk about this, but I want to encourage you, bring your questions and comments. Either leave those comments right here on our YouTube channel if you're watching, or on the Defeating Taxes private Facebook group. You're going to see that it's very important to have that personal board of directors. Talk to your financial advisor and your tax professional when you're making these type of decisions. So yeah, let's jump into these considerations. And we're going to start with what happens when you go from a W-2 position to another W-2 position. Obviously, the driver many times for leaving an opportunity is compensation. Maybe it's opportunity, but it doesn't really matter the reason why you're moving. Maybe it was involuntary, right? Maybe you got downsized. Maybe a company got sold. It doesn't really matter why. But I want to just talk through some of the main considerations that someone should think about. And
I'm sure there's probably been more of this than ever in the past 4 or 5 years, right? I mean, we talk about that little thing that happened in all of our lives, the whole world shut down, basically. It's a lot of people went remote. I mean, I could think of just on over two hands, the number of people that didn't even want to go back to the same company after everything happened because frankly, they kind of realized like, oh man, the culture sucks there. I want out. So a lot of people changed, right? You have a
Sure.
lot of shifts.
There's been shifts. There's been times where people have, you know, been got used to working from home or remotely, and they don't want to go back. So it could be a variety of reasons. But what you should be considering, the first thing I would be considering is what am I going to do about retirement? Do I have a 401k, a 403b, 457 plan, assets? I'm leaving that employer. What should I do about the money that's there? Am I vested in 100% vested? Should I roll it into my new 401k if I have another company that offers it? Should I roll it into an IRA? Obviously, if you just take the money as a distribution, there could be a big negative tax consequence as far as it's taxable and a 10% penalty. What if I've taken a loan against that 401k and I need to pay it back to prevent that tax? So handling the 401k, 403b, 457, whatever your retirement plan, simple IRA, handling that retirement plan that you have with your former employer is very important and something to consider and uh, not be taken lightly. So definitely, like I said, talk to your tax professional, talk to your financial advisor. If you're listening or watching this saying, "Oh, I don't have one of those in my life." That's what we're here for. Reach out to us, John. You know that we have an extensive network of trusted people. Um, and you might I mean, we've run into situations where someone had a 401k with an employer that they haven't worked at in a few years for whatever reason. Um, so again, the 401k is really designated for active employees, but those accounts could become what we call orphaned. And but you want to address those. There are definitely some benefits for rolling it out of that former employer's plan. So that's one thing. Another thing, quite frankly, something that I just dealt with today in as the kids like to say, IRL, right? In real life, is do you have any unused flexible spending account or daycare flexible spending accounts? Do you have a or a health savings account money from that old employer? Can that just because you leave the employer, if you have a health savings account, that money is still yours. Do you roll it into a new HSA? Do you keep that account open and use the money until it's expired? So do you have some type of HSA or FSA, flexible spending account is the FSA, um, that needs to be used or moved in some way, shape, or form? So that's something to think about.
And Chris,
You
you
know,
mentioned it earlier on too, it's for those that don't know when you talk about are you vested in something. So, I mean, I'll kind of give a little bit of example. So tell me if I'm off because I'm sure you can do it way better. But those that are familiar with that, right? You might be in a position, you might look at your account and say, wow, we'll just use a number. Wow, there's $10,000 in there. But, they do an employee match. I put five, they put five,
right?
but you're not vested, right? So basically what that means invested, not invested, vested is
Vested.
that
Yeah.
it's in the account, but usually there's a period of time where you're remaining with that employer, other terms, until that money's actually yours. So like it's showing in the account, it's growing in the account, but it's not really yours to withdraw or move, shift, right? Is there anything else that I missed
Until
in
you've
there?
been an employee for a certain period of time, for instance.
Right.
So
I
absolutely.
remember the first time I seen that in an account of mine, I was like, what do you mean it's not mine? It's in my account, much younger. And then you think you're like, oh, okay, that it makes sense. If they're investing in you, as an employee, so it makes sense. So yeah, those that are getting into it, if you're not familiar with it, there you go. There's your definition.
Another issue. This happens all the time when I see people start new employment. Making sure your withholdings from your W-2 wages are proper, right? Because you get that first, you're getting onboarded as a new employee somewhere. They send you your W-4 form, which is your withholding certificate, and you fill it out. And what can happen is that you maybe your former employer was withholding maybe more or less than your current employer. And if without the right tax planning and without doing your tax projection, you could find out that you're either way overpaid at the end of the year or way underpaid and they actually owed significant amount of tax, right? Because what happens if um you just fill out your W-4 form differently so make sure your W-2 withholdings after a one or two paychecks, double check those. Make sure they're in line with what your marginal tax rate is. And then if you need to pivot, then work with your employer to do that. Remember that W-4 form can be changed. W-4 form tells your employer how much tax to withhold rather, from your wages.
And with that
And if
too, I
you,
mean, it's been ages since I filled one of those out, but usually, I mean, you could get the form yourself, and then usually it's just submitting it to HR or whomever
yeah,
it
most
is.
larger employers have a portal that you can submit yours. So even smaller employers that use any type of online payroll service, they're gonna have a portal that you can put in.
Here's a question for you based off your experience. So, obviously, y'all's private practice, you're dealing with some higher net worth individuals, real estate investors, etc. So, the likelihood of them having been or with a company for a longer period of time is more likely than if you were working with a bunch of millennials. Say, for example, I'm on the very tail end of that, so I can talk smack about millennials, where they switch jobs every year. Have you ever come across this with clients where they've been with the same employer, say for 20 plus years, and you're like, wow, or say it's a new client you guys have on board. You say, wow, this is way off. Like you need to go in and readjust this because it has been drastically off for a decade or something. Like, have
Mhm.
you seen that a lot?
No, no,
Good.
because I mean, the withholdings, they would know that if it was off, if they had an anomaly with their tax return. So let's say they had they're breaking even or overpaid for years and years, and then they owe. So the indicator would be the result of their tax return. It gets very tricky when people are paid bonuses, most of it, or if they have employee stock options and that sort of stuff. But
Gotcha.
by simply doing a tax projection, that's how you know where you stand.
Perfect.
Yeah.
And I know we talk about that in almost every single episode that comes up where it's something everybody can do. Like it's not, you don't
Mhm.
have to be making seven figures to do tax planning, as we like to say,
No,
right?
tax planning is for everybody.
Right.
Next thing is something that's going to be very tricky, okay? Especially if you're with a larger employer. Many larger employers have something called group life insurance coverage. The advantage of group life insurance coverage is it's the first $50,000 of employee paid group life, as far as from a term insurance, is tax free employee benefit. Anything above that is a taxable fringe benefit. Or you might have increased the amount of coverage through your pay with a group policy. Typically, there's not a lot of underwriting, or you don't have to go through a health exam. But the challenge is when you leave that employer, your life insurance is now gone,
Mhm.
and that's something to consider. Especially, you know, the older you are, no one's getting younger or healthier typically. And that's a blind spot for people when they change employers, to be certain of that, right? Especially if you've got a family, if you don't have life insurance outside of your employment, that could be a big zinger, we'll say.
Especially if
Big
you leave a
concern.
little bit more abruptly, right? You're not really thinking about things like that. You're more like, I gotta, I gotta do this. I gotta do this quick. So
Absolutely. So definitely make sure, even if you have great life insurance through your employer, I would definitely talk to someone about coverage outside of your employment. And again, if you have those questions, please jump into Def- Taxes. Just go to defeatingtaxes.com. That's our private Facebook group, or leave a message for us at Teaching Tax Flow. John, maybe you could put the link to the hub in there. We have teachingtaxflow.com/hub, HUB. Anyone in our community can submit their information and ask for a referral through our
and
community.
I'll say
So
too, a little kudos to ourselves on that one, right? I think everybody resources that we've brought into that hub, it's never salesy. So it's never, it's not like we do an intro to somebody or somebody on our team does an intro and then this other person just calling them, hounding them like, hey, let's do this. Let's do business. Let's do this. A lot of the times I'd probably say, if I had to guess, probably 95% of the time, they're just answering questions and leave it at that. Right. Like, I mean, it can be on anything. And that's, I think, the glorious thing about it's taken us years to build that hub, but I mean, decades basically of some of these contacts and it really is great because otherwise you're getting sold on something, I think, by a lot of people. So, anyways,
absolutely,
little pat
yeah.
on our own back there, I'd
We've
say.
got a lot of resources for people, and we're constantly adding resources, and take you and I are in meetings all the time with people that are interested in and maybe working with people in our community, and we're making sure that we feel like it could add some value. So, I mean, a lot of people in the community have been guests on this podcast as well. So there are tons of great resources. Let's say you're leaving a job and relocating. So, with the Tax Cuts and Jobs Act, a lot of those things changed. But you have to be weird where the moving expenses used to be many times tax free or tax deduction. Now, most employer paid moving expenses are taxable. So, for instance, John, let's say that your employer paid $30,000 for you to move from one place to the other. They'll put that on your W-2, but they're not going to have as much withholding as they would if it was a bonus. So the point is, understand the ramifications. If someone is paying for your move, that's employment related, the tax ramifications of that. And then the final thing, if you're going job to job, or even if you're leaving a job in general, are there stock options or RSUs, which stands for restricted stock options, that are triggered? Or do you lose them potentially, right? So sometimes let's say you leave a job, you might have to exercise those stock options, which could have a big taxable event. IRL, right? In real life, I mean, I just met with one of the private CPA firm members that has about $500,000 of RSUs. The person left their employer and had to exercise those. And again, I'd rather have $500,000 of taxable income than not. But it was not something that person, if I asked that person a year ago, do you expect to exercise these options? That person would have said no. Just circumstances changed. It was time for that person for a new chapter in their life, and they had to exercise those options. So just something to consider. Stock options or RSUs when you leave an employer.
It's funny,
Yeah.
all these things that we're talking about here, to make it maybe relatable to some people, it's, you always hear the stories of, oh, somebody won the lottery, unexpected. What are the chances they're going to win the lottery? They're all excited, like, yeah, I won $100 million. And then like, oh crap, I really didn't win that, given that it's not divided up anywhere else. But, oh, I got to pay tax on this. I really didn't win that. It's kind of like with all this, right? Like if you're leaving, most likely if you're leaving one position for another, it's probably for the better. Like you probably have a lot of say in this, it's whatever it is. So you're really excited about it. And yeah, if you hear about something, you're like, oh crap, I need to exercise these, the stock options. It's almost like it's an unwanted surprise, really, unless you're aware of it, right? So a lot of these I think are really like that. Here's a question for you too, going back just a hair. So we talked about the relocation reimbursement, being taxable. What about like housing stipends? Are those taxable?
Yeah,
Do you
it
know?
depends. That comes down to is it a taxable or non-taxable fringe benefit? There's special rules for clergy, especially. Um, it comes down to there's a lot of rules with that. Is the assignment a temporary assignment? Is it or is it a permanent move? So
Interesting. Okay.
yeah,
No,
you
that's
got to
a
check with your HR if you're in that situation. It's a great question. That let's say you're in someone that says, "Hey, we've got let's say you're based in Michigan, John, and hey, we've got a job in California for you for 4 months." I'm sure you'll get taxed there, but we're
no, I
giving
know what
a
you mean.
housing stipend. You can go rent an apartment, or put you up, or do they put you up in a hotel with an accountable plan? So it really comes down to taxable versus non-taxable employee fringe benefits.
Right. That makes
Yeah.
sense. So yeah, it's very, very, very situationally dependent, we
Yes, as
should
we
say.
like to say.
I feel like we haven't used
Okay,
that
so let's
term in
say
a
you're
while
leaving
either.
for self-employment, right? You left your job, and you're going to either be self-employed, and you're either going to so your income is going to change. You're either going to report it on a Schedule C for self-employment, or maybe you're entering, maybe you're becoming part of a partnership, right? Maybe you're an attorney, and you left corporate America, and you and your buddy are creating a partnership, your own law firm. And then that means you'd get a K-1. Or maybe you're an S corp. I don't like people jumping in S corps. Check out that episode. We actually had someone in our Defeating Taxes private Facebook group. Every Friday we post, and basically I let people ask whatever question they want. And this week we had someone ask a lot of questions about S corporations, which are really good questions. However, the tone was, it's not time. Don't jump into it right now.
Yeah, that's one of those things that I think I will remember. It used to be, I knew how to poke the bear with you with LLCs and everybody wanting one of those because they think there's a tax benefit. But definitely the S corp topic is now the one that I know is a weak spot for you
Hey, yeah, I mean,
if it doesn't make sense.
if it
Right.
doesn't make sense. So think about your income is going to be taxed differently if you go into being in for business and in business on your own, and instead of obviously the S corp is a hybrid model, but in general, okay, instead of you getting paid at a W-2 where all the taxes are getting withheld from that, you are now responsible to make quarterly estimated tax payments both on the federal and state level. You're also going to be subject to what's called self-employment tax. So, John, when you receive a W-2, your employer withholds 7.65%. The employer actually matches that 7.65% and it goes into the Social Security system. And that's a 15 point. But when you're self-employed, you have to pay both sides of that, which is the 15.3% of self-employment tax. You're also going to be on your own for retirement contributions, right? You don't have that employer anymore. So are you in a position that you can contribute to retirement? What type of plan should it be? You've got everything from a traditional IRA, Roth IRA, all the way up to a defined benefit plan or a solo 401k or a SEP. Simple IRA, it's almost an analysis by paralysis. You want to talk to, I know it seems like I keep repeating myself. You want to talk to your financial advisor, talk to your accountant, talk through, is this a point in my life where I could contribute to retirement? How much can I contribute? Do I have other employees? And design the retirement plan around your needs. Don't just pick one and put a square peg in a round hole.
That is honestly, that's probably one of the best quotes I've heard you say in 6 months. And you
Oh,
say a lot
geez,
of good
I should
ones,
record it then, huh?
but
Oh, good thing
that
we're
is a good
recording it.
one right there. Because yeah, a lot of people, it's just like, "Oh, I'll take anything. I'm going from something here and yeah, just make this work." But you're kinda stuck with some of that, right? It's not
Yeah.
as easy as flipping a light switch on and off in 3 minutes, so
So timing is important. And now the nice thing about being self-employed, maybe some of the things that you weren't able to deduct as an employee, we know with Tax Cuts and Jobs Act, and it got extended for OB3, unreimbursed employee business expenses are not deductible from 99% of people. Then now they are. So home office now. Now you can, you might, the point is, if you go from a W-2 position to self-employment, you're paying tax on your net income and you could deduct some of these things that you weren't able to deduct when you were in the employee role. So that's something to consider. And then the final thing, which we alluded to, would be potentially loss of group benefits, right? Especially health insurance, life insurance, disability insurance. How do you pick those up now being self-employed? And what are the cost considerations? Can you yeah, how do you find that? Maybe you have a spouse that has some of that coverage. So really, when you're self-employed or own a business, you're probably in contact with what we call your center of influence a lot more than when
right.
you are a W-2 role.
Yeah.
Mhm.
And this obviously, I mean, there, like we said kind of at the beginning, right? I think we gave a good handful of scenarios that everybody in the workforce will go through at one point or another for umpteen number of reasons. And we'll have a little fun with this, right? I'd say, because obviously we have a lot of loyal subscribers and listeners to this podcast. Won't give away the answer, but we'll kind of put it out there and then let us know if you know the answer. Maybe we'll send you something fun or do something for you. If you go into the self-employment realm with new things from the One Big Beautiful Bill Act or OB3, Chris, as you
Mhm.
mentioned it there, right? If you're a foodie, you may want to consider becoming a commercial fisherman. Not going to say why, but Chris, you get where I'm going with this one as far as for
Yeah, and
deductions go?
that carve out we found out when at the recent is really challenging
It is a
because I
weird one.
believe only commercial fishermen in Alaska get the 100% deduction for meals provided to them. So
It's so
I wouldn't
weird,
I
but it's
wouldn't
very
go
political.
into being I don't see many foodies wanting to hang out on a fishing boat off the shore of Alaska just to
No.
get a little additional deduction. Well, maybe you never know, right?
Hey, fun fact, Chris, I don't know if you knew this about me, but when I was in high school, so when I was a senior, I had been dating the same girl for about 3 years, and I didn't wanna leave her for a summer, so I actually turned down a job to work in Alaska as a long-lining, salmon fisherman because I didn't wanna leave her that summer. Now I haven't talked to her in about 25 years. I shoulda went on the damn trip. I woulda
Hey,
remembered
those
it.
yeah, those people make some big bucks, but it's a very risky job.
Yeah. I think even at that time, it was almost a guaranteed, like, 38 grand in 4 months,
Mhm.
but there's a lot that goes into it, so,
Yeah, it is a grueling job from what I
yeah.
understand, and I know a couple people that have done it.
Mhm. It's
Let's
a
say
regret, though.
final thing is let's say you're leaving for retirement, right? So you're retiring, you're leaving your W-2 employment. Now you might take some gap years, you might semi-retire, you might start doing other hobbies. What are the considerations, right? Well, you might have to take required minimum distributions from your retirement accounts now that you're not working. Um, should you be drawing Social Security? Are you already drawing Social Security? How does that affect the tax on your Social Security? Do you have medical coverage? Are you eligible to enroll in Medicare? There's just so many things. Should you take a lump sum distribution potentially from your employer, or if they offer you a pension or a lump sum distribution, should you roll that lump sum over? Do is your retirement income going to be taxed differently than your W-2 wages? Are you going to move and
Mhm.
maybe now you're in a different state? So obviously, there are a lot of considerations there. And typically, John, a lot more planning goes into that transition to retirement than usually leaving a W-2 position, taking another one, or quitting your job and starting your own business are, I'm not going to say they're impulse decisions, but they're decisions that don't take years and years of planning like retirement does.
Right. I'm sure I like to throw my father under the bus because he's captain planner. I'm sure I'm sure he had been planning for since the day he got a job for retirement, but some people, we say a lot of this happens on impulse too. I mean, Chris, you know this, being from the Metro Detroit area like myself, when the big auto manufacturers went through a big old flip and turnaround, a lot of people jumped into retirement pretty damn fast and didn't expect it. So I almost
Yeah, I
wonder
mean,
too, and a lot of those guys, I know for a fact, a lot of those have been working for the same company for 20, 30 years. I wonder how much of this kind of snuck up on them where they didn't think about it and, you know, jumped off a cliff in a sense.
oh, absolutely. No, it can happen. Um, well, I know a lot of people count down to retirement, but not everyone plans for retirement like your dad did. So that kudos to him,
I
and
love him for that.
we hope he's listening to this as we wrap this episode up. I think the theme is when you leave a job, there's a lot more things to consider than just pay.
Man, you are like dropping knowledge bombs today. We're gonna get a t-shirt that says that. But yeah, I mean, really what you said there, and I think has been the theme throughout this entire conversation, right? Is there's stuff out there. Sure, things can be unexpected, but really, I'm glad we're having this conversation too, because even if somebody's listening to it, or they listen to part of it, hopefully they got to the end here, because otherwise they wouldn't have heard what I'm about to say. But it's good to know this stuff before the opportunities even come up to switch, right? Because like you had mentioned a couple examples, right? The kind of being tossed in to make a decision could have very, very large tax implications that may, depending on the situation, offset the benefit of leaving for a financial, a boost in pay somewhere else, depending on how it works out. So, it's good to know. It's good to know. And then actually what we're going to do with this one, Chris, I just thought of this while you were talking is, I was kind of mentally thinking of situations that we've heard even in the past couple months. And, we're just in Vegas for Taxposium and listening to other tax pros. And I'm kind of like a sponge absorbing it all there. They're sharing examples of their clients. Not saying their names and all their info, especially, but, the situations. Oh, I'm going to pop a little survey, and I'm going to put it on our Facebook page. I know it'll be on our public Facebook page for Teaching Tax Flow. Um, we'll do it a little different. Sometimes we put it in the group, in the Defeating Tax one. This one we'll put on the page if we can, or we'll put it in the group. We'll figure it out. There'll be a link there. Just asking people how comfortable they are or were with all this stuff, or how much they knew about all this that could sneak up on them before. they listen to this. I'm just kind of curious too. So, and then from that, obviously we urge everybody, just comment in there. Let us know your situations. Like maybe it happened to you, somebody, make up, say John Smith asking for a friend type deal. It'd be good to know because I think we could take this in a lot of different directions and dive deeper too. So we want to make sure that we're following a path and a track and an aisle that everybody's interested in. So sound good?
That sounds great. I look forward to hearing everyone's feedback, and I hope everyone has a great rest of the day.
All righty, everybody. Thank you again for joining us here on the Teaching Tax Flow podcast. Again, a couple episodes away from 150. I think it's something fun to do on that one. And especially if you're listening to this and you're not watching it, I know that we are the most handsome creatures on the planet. So of course you want to watch this. Kidding, by the way, if you're listening to this. Hop on YouTube. Subscribe to our channel on YouTube. We have so much more content than just these podcasts. We just crossed over the 500 video count on there. A lot of them are shorts. Some of them are longer form. We have recorded webinars that we've put on there, lessons, all kinds of stuff on there. If you go to our channel and actually search within the channel on any keyword, it'll take you down a ton of stuff, but it'll categorize it for you. So check it out, YouTube, Teaching Tax Flow. And as we always close it out with, I'm going to start humming this or doing something. We'll see everybody back here again next week. Same day of the week, completely different topic, but same day of the week, different date on the calendar. Flip it around somehow. Anyways, I'm not your tax guy. Chris is. Clearly, I can't even talk today. So we're going to close this out. Everybody have a great week. We'll see you soon.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.